Welcome to the Scottish Property Podcast. This is a show where we aim to educate, inspire and entertain through real life stories and interviews from people in the Scottish property community.
As always, thanks for listening and give us a follow on social media and subscribe to our YouTube channel. Remember to join us at our monthly networking events on the first Wednesday of every month. Tickets are available on our website. So without further ado, we'll just cut straight into this week's podcast. Emma Ross from Ross Commercial Finance. Welcome to the Scottish Property Podcast. It's been a long time, hasn't it? My fault.
Yeah, it's your fault, that mate.
I don't know, I'm scared to look back at the LinkedIn messages now, but I think it was maybe 2019.
Yeah, and every time I did get back to you, you just kept digging me again.
But that obviously shows you how long we've been going with this podcast as well. But yeah, finally delighted to obviously have you here in the hot seat. So thanks for joining us.
Thank you for
But you've been a long way in 5 years then. Tell us where you started and where you are now.
So I started off with HSBC Bank just as a rep on the phone, and then built myself up. I went over to residential mortgages, done that for a few years, and I was good at it, but it was too repetitive for me. There wasn't really much change in every day. So then moved over to the commercial side, and I'd done that for 5 years and ended up looking after London South East for a period of time, which was really, really different to what I was used to from like kind of Glasgow clients.
Is that like travelling? You haven't travelled down to...
No, not much. A lot of it was like, wasn't Teams, I don't even know, it's Google Meet or something like that. Like, but it was like... I only had to do them maybe once every 2 months or something. And then I left to join a master broker firm, which is where I learned. I couldn't have went straight from basically doing what I'd done with HSBC to doing what I'm doing now, because I think you need it, that kind of bit in between.
Did you say master broker?
Yeah.
What does that mean?
So I think that's just basically what they call themselves, I suppose. But they were a big name in the marketplace. They won all the awards, all that sort of stuff. So
it's like a brokerage for buy-to-let, commercial finance, like
just basically everything that I do, like they basically done the same, but they a lot the class is a packager as well, so same as what we are. So we get a lot from other brokers that maybe can't place the deal. So I went to them. I learned so much from them, and then they asked me to head up Scotland for them. So in Northern Ireland, which I done for 4.5 years. I was with them for, and then. Actually, today is my 1 year official anniversary of setting up my own company. So I started Ross Commercial Finance last year, and
excellent. Why did you make that jump then? Were you just like at the end of the day, you're working for a big corporate company? Did you just feel like, do you know what, I can do this myself, or there's scope to actually build this for myself rather than somebody else?
Bit of that, and so. Obviously, you look at the numbers you're bringing in, and I could see the net profit that was making the company, and I was like, oh, that would be nice in my bank account.
Yeah, sure.
But taking away that, there was other things that I just wasn't the right fit for me. I would probably the best way to put it.
Right.
And my main goal was setting up my own company was I want to put like morals before money. And that's in everything that I do. And I just want to make sure that I have a culture where everyone's respected and valued, and it was a big, massive part of me wanting to do something of my own to make sure that I treat everybody.
Because you couldn't control that really on somebody else's company, could you?
Exactly.
Yeah, makes
you
sense.
built up a decent name for yourself, obviously, in that time that you'd been appointed, like, head of, was it Scotland and Northern Ireland?
Yeah.
So, like, you'd obviously, you're quite on LinkedIn quite a bit as well. And so
I was like the kind of, if they ever listen to this, would maybe disagree, but I would say the face of their company for a long time.
Yeah.
Like my old boss used to call me the Jennifer Ellis, is that the athlete of finance? Like, so I think I did really go out my way to like build our company, and I did put so much passion into it. Like I gave it my all the full time I was there. But it was just, I thought, well, if I can build it for somebody else, like, and put that passion into that, why wouldn't I do it for myself?
Were you able to take some of those relationships with you then when you set up yourself?
No.
That was what about the big stumbling blocks? And I've set up a finance business. Was there a lot of like FCA regulated stuff that scared you, or did you?
No, so I decided to go under a network.
Right.
So a lot of people will go straight from maybe going into being directly authorised. For me, it made more sense to go under a network because they do all my compliance side, and it just takes less stress off my side of it. So I've had a really, really, really good relationship with a lot of these lenders. Like, they take you to events all the time and make you feel like royalty, like well, the lenders, because they want your business. So I managed to build up a lot of good relationships outside of work, where most of the lenders now are my friends. So I had that already like in my pocket. But when you're under a network, you're maybe doing I don't even know what the value that business does, but you've got a lot more clout under you to be able to say, like, as a business, the network, we've done this amount. So you've got, it's a bit like if you're buying trainers from JD, if you go out and buy one, you're not going to get a great price, but if you're buying 200, you're going to get much better deals. So being part of that network allows us to get like much better rates for our clients, basically. So I always knew if I was going up against other brokers for a deal, and I was
be so much more competitive.
Because we can class ourselves as like gold brokers and stuff like this.
Yeah. Obviously, the majority of people that we speak to on the Scottish Property Podcast are residential investors, or we do cover commercial as well. And it's obviously getting a strategy which is getting more and more talked about, buying commercial property, because of all the government legislation, the tighter regulation now. And, you know, we're seeing some, to be honest with you, we're not seeing it personally, but we hear in the news that a lot of residential landlords and buy-to-let landlords have just had enough now. So, you know, in terms of building commercial assets, I mean, we speak to a guy called Jerry Alexander quite a bit. He's a friend of the show, and he very much focuses on commercial property. He's got his own podcast as well. I'll give him a wee shout out.
He's not on for a few episodes, has he?
Jerry?
Yeah.
No, we probably need to get one again. But he talks a lot about all the different strategies in commercial property. And you were obviously saying there as well, you know, you've got all sorts of different clients. Some people are wanting to be a bit more creative. Some people are just like, literally, they've built their wealth maybe in other businesses and just parking that and building assets just to invest in long term. Is there anything you're seeing specifically at this moment in time as the broker sort of putting these deals together and that you think, oh, that actually from an investment point of view, that's a really good one?
So many, like God, I'm only a year in, but man, if I had that money sitting there, then I would be jumping in most of these. But like a good example, like, because you can put, and I'm not a pension specialist, so don't quote me on this, but I'm sure it's 60,000 a year you can put away in your pension. So a lot of times people are doing that, putting money aside the pension and moving it into SIP or SAS, and then using that to buy commercial assets. So for tax purposes, it can be advantageous. So seen quite a lot of that, seen 100% lending quite a lot. So I had a client where they were buying serviced offices. It was worth 2.6 million. They got it from a liquidator for 1.6. We got them 100% funding.
Just because of the discount on it.
Just because we can use the value around the purchase price. I also had one down in London that we got directly from a liquidator. It was worth 800,000. The bank only wanted 400. We got it for 450 for the client, got 100% funding again. They then done some refurb on it, and then we then turned that round, released it back up 75%, paid off the bridge and finance. The client then had a big pot of money to move on to the next development.
So would you say you are, because like in the residential space, I do see this, you'll get like your vanilla broker who won't really do the kind of creative stuff, but then we know other brokers who really like go the extra mile.
Love the nitty gritty.
And I prefer to see the more complicated, the better. Like I like love that, and that's where I really feel like I can shine. Like, and this is why I always say to people, if you're looking, Mr. and Mrs. Smith, want to do a buy to let, go to your residential mortgage broker. They'll be better for you. Where we really fit in nice is you've tried your residential mortgage broker, they can't help you, or it is something that's maybe just a wee bit quirky that you want somebody that's got a lot of experience in that to guide you on, like, why don't you try this? Where like, I think nearly every call I can probably have like 3-4 different options of how to do it, and that's just with experience. It's nothing special. Like, it's just you learn over time the different ways to do it. Like, for example, if somebody's going to buy a farm, like I had one where it was an equestrian, so she didn't have enough money for it. We were only able to do, because it was a startup business, we were only able to do if it was all commercial up to 70% loan to value. She didn't have enough cash to put into it. So how we done that is we split the title. The residential mortgage broker got up to 90% of the main residence. We got up to 70% of the commercial side, plus we got a startup grant, and that got her like all the money she needed. So it's just looking at all the different options that are available for people. 100% funding's a big one as well when you've got a background asset. So a guy that's a big property sourcer in Glasgow, he sends me all of his clients, and I've done a lot of really quirky ones for them where they don't have experience. So it might be somebody that's still at uni or still working part-time or whatever. They don't have much background assets or income, and there's lots of ways where we've got them 100% funding by using like their parents' assets, as long as the parents are okay with it, obviously. But like we gear up on it. So if he's getting, let's say, like a property for 100,000, it's worth 120. They're going to buy it. They're going to spend 20,000 on it, and then it's going to be worth 160, just as a kind of rough idea. We would be able to take security over that target property, take a second charge over like any background asset, get 100% of the money to buy it, and then 100% of the money to do the works. We then refinance that back up to 75% loan to value, or they can sell it, pull the money out, pay off the first charge and the second charge, and then give them a lump sum of money to move on to the next one. So
I'm always trying to get my head around the valuation of commercial property.
That is a start, especially, I don't want to slate the valuers, but that's a big issue in Scotland now, especially like we don't have much valuers, and they know that. So like a commercial valuation, so you've got different types of valuation. Like if it's a normal residential, it's like, okay, the home report on that's 120,000, great, you understand it. But with commercial, you've got like market value, vacant possession value, 180-day value, 90-day value. And then if you're doing a development, you've got the gross development value. And there's so many different valuations. And that's, I would say, what really distinguishes a good commercial broker. Because see, if you're just saying, if I was going up against another broker and they're saying, I'm getting you 70% on that, and I'm saying, I'm only getting you 60%, then we'll go, well, I'll go with that broker because he's getting you 70. But if he's only getting you 70 of the 180-day value and I'm getting you 60% of the market value, realistically, I'm probably actually getting you more borrowing than them. And it's a lot of the terms that come with it. So I might get 60% loan to value. I've got that deal I could go to as well if I wanted to, but it's about understanding what that lender's going to offer compared to the other lender. So on something that might be 60% loan to value, you might get like unlimited overpayments, no early repayment charges. The lender fee will be less. You can add a lender fee on top. You can
target the kind of suit your client and what their needs
so it's all
are.
about understanding what they're, whereas the other lender might be 70% of 180-day value that they've not told them, and that actually when then the valuation comes back, if then there's a certain difference in the 180-day and the 90-day value, it might be less again. The client might have then just wasted $3,000 or $4,000 of valuation, and then the other lender might not have flexibility, like unlimited overpayments, their arrangement fees, all that might be higher. So it's really about understanding what your clients' like priorities are. Are they going to pay it back early? Do they want to be able to make overpayments? Do they think that the market's going to change? And then they might only want to have the like 5-year fix, but 2 years they want that ability to move it on to a different rate if the rates come down, etc. So
Let's take a quick break, guys, from today's show to talk about selling your property with Prime Property Auctions. Now, myself and Stephen have both used John and Lewis from Prime in the past, and we can personally vouch for their service. They sell vacant and tenanted property, and you get to control the minimum reserve price so that you're not selling your property for peanuts. They pay for all the stuff like photos, videos, and all the marketing stuff up front, so you're not paying anything from the start, and it's a no sale, no fee. So if you want to check out Prime Property Auctions, then get across to the link on the show notes and speak to the guys. It's all very like each property transaction deal, I understand, is going to have its own, complexities and its own way of working. But just so I can kind of get my head roughly around it, say I'm a business owner, right, and I'm looking for an office premises, and say there's a property on the market for say 200 grand or something like that, and I fancy it. How does the lender assess that if I'm coming to you, for example, for the finance? What would I need? First of all, how much deposit am I going to need generally? Just keep it basic. And then what's the lender going to look at for their security? What sort of questions are they going to ask? What do I need to have ready? What's your advice for people?
So this is where it's really different from residential. So see with residential, you've got a sourcing system. You kind of put in the person's name, age, salary, and it'll kind of spit out like deals for you.
And it's like there's affordability calculators, or there's 4.5 times your earnings.
So with commercial, like so me and you could go for the exact same property. We could have the exact same income, but I might get a better deal than you based on my personal guarantee in the background and stuff. So things, it's all done on a risk-based rating. So the higher the risk means the higher the rate and the lower the loan to value. So our job is to de-risk the client as much as possible so we can physically present the deal the best way to get the best deal for the client. And when you're asked about a commercial asset, like a physical commercial, then it depends whether it's for a trading business or if it's for commercial investment. Right. So let's say, for example, your trading business wanted to buy a premises and you were going to trade from 60% of it and then you were going to rent out 40% to a third-party tenant. I actually just completed one this week that was less. It was really, the rental income from the third-party tenants was enough to cover the full mortgage. Right. So he's basically sitting there rent-free in his trading business. on something like that, because over 60% of it was for the trading business, then we could go up to 75% loan to value, because it's called terminology called opco propco, which basically means that buying under a separate limited company and put a lease agreement in place with the trading company and the third party tenants.
It's an investment company,
yeah, and it keeps it separate. But on something like that, we could get up to 75%. However, if, for example, the new limited company was buying this asset and renting it out 100% to third party tenants, we do have lenders that go up to 75%, but most of them would be around about 70% or 65% on commercial investment.
That's interesting. Why is it lower loan to value if you're going to a third party rather than your own? Because surely it'd be more risk if you were renting to your other trading company.
If we're doing it to the trading company, though, we do a full evaluation on that trading business. So we'll look at the accounts, we'll look at the EBITDA of the business.
I want to know what are the lenders? Because is it quite? Do they ask for a lot of detail?
So when we do our full proposals, I'm not kidding when I say it's so in depth. We use background systems, we do full due diligence, and we don't even take a fee until we've got a client a credit backed offer that they're happy to proceed with. So sometimes we can put so much, I'm talking full day's work just on one client, and then it might not go anywhere. And I actually do this month, and it's killing me a wee bit, but it was one of them was a medical practice, such a good deal. I'd done so much on it. Do you know what I mean? I was actually so excited to phone the client to tell them I got the offer approved, and that the rate I'd got them, the best rate I'd seen in ages. I was even surprised at myself. It was so good. I was so excited to tell them. They were like, "That's amazing, Emma. Thanks so much." Called them back a few days later. That was great. We took that to our existing bank, which is Handelsbank, and they've agreed to match that. But thanks so much for all your work. I'm like,
And as the broker though, how does your fees work? Where do you charge the fee?
We wouldn't have charged any, because we don't charge a fee till we've got them a credit back to offer, and they're happy to proceed with that offer.
Right. Okay. And how do the fees? How does
that as leverage to go to their existing bank and get them?
How does the fee structure work? Sorry, is it a fixed amount or is it based on the deal? Or
I normally charge a fixed amount, so I normally charge a 995 fee once the clients get the credit back to offer they're happy to proceed with, and then a final balance paid on completion.
Right.
That final balance depends on so many factors. So as a rough idea, around about 1%. But if it's a deal that's going to take me, say an acquisition, a business acquisition, there's so much goes into it. Or a trading business deal, there's a lot more work goes into it. Whereas if it's a buy to let, it's easier. So it really depends on the work, and it depends if it's a recurring client or looking at bigger picture. Do I have an opportunity to do? Is this going to be somebody buying a bit of land? So I'm going to get a bridge, and then are they going to do development finance? Am I going to get the development finance, and then I'm going to exit that into long term finance? So that one deal might be 3 deals. I wouldn't then charge 1% or 1.25% per deal. I would be really fair on that, because I know the bigger picture on it. Also, it does depend on the lender as well we're putting it to, because some lenders might pay us 1.5%, for example. Some lenders might pay us 1%, some lenders might pay us 0.5%, some lenders might pay us 0%, but I'll always go to what the best deal is for the client. So if the lender's not paying me, I would just have that upfront conversation with the client saying look, I normally get paid from the lender. This is the best deal for you. We're not getting paid. Would you be happy to pay us a bit more because we're not getting paid from them, but this is the best deal? And you would never have a
transparency is so nice. I've had that before in the past, where I think maybe 10, 15 years ago starting, I'd always go to the broker that didn't charge a fee and shit like that, and then you realise that they're actually getting the prop fee from the lender. So if you're not paying them anything, they're just incentivised to go with whoever's paying them the best fee, regardless if it's the best for you.
And that's the worst to do, is go to whoever's going to give you the best fee, because then if you've got I quite even I know that I'm up against another broker, and I know the lenders are going with, and I know the kind of deal it is. I'm that's fine, you go with them, but come back to me and let me try, because I know for a fact I can pay a bit. It might be a lender that's not paying me, but I know that I can get a better deal. So that's
how is the general commercial lending landscape at the moment in terms of is it getting any harder, easier?
The lender's appetite for lending.
Aye, lender's appetite, and jump through hoops, and interest rates as well. I mean, obviously interest rates have gone up, but
interest rates are weird. I feel like I don't even know how to follow. The base rate drops, and then we get a message from a lender saying we've just put the rates up. I'm like, what?
That doesn't really work like that in terms of following the bank rate. But in terms of because I think I was actually looking at, because I bank with RBS. Right, and an email came through or something like that about commercial mortgages or expanding your business or something like that. And I phoned the woman up, and I was like, this just doesn't sound like I could work with this woman, the questions that she was asking and all the rest of it. That's why I need to find a good broker like you, obviously. So when it comes to when it comes to the mainstream kind of banks and lending, is there often a lot better options out there? Just depends on the deal.
I would say it depends on the deal. So sometimes a high street is the best option for the client. So whether it's HSBC, Barclays, Lloyds, RBS, and they might be the best deal. But actually, realistically, from a not even just a rate perspective, but flexibility perspective, time perspective, then it might be one of the lower tier lenders. But I will always say to a client, what's more important, rate or speed? Because if I know that their priority is speed, then I'll automatically take out like 5 of my top lenders straight away, because I know that speed is not going to be their forte.
What would be a good rate at the moment? Again, going back to me and buying my office and stuff like that.
If you were buying the office for you to trade from, which would be the kind of opco-propco scenario, you would be looking probably about 6.8%. I got one last week for a client on that scenario. It was 6.47, I think it was. But then that's all on that client was really not risky at all. So, but then...
And would that be a 70% loan to value?
75 on that
75, that's decent.
Yeah.
And then going back to, the more creative stuff as well, if you have to go down the bridge route or the kind of development finance and stuff like that, obviously it gets a bit more expensive. We've actually got a few people in our network that are looking at or one I can think of that just bought a hotel that they're converting it into individual units, like an apart hotel and stuff like that. So I would imagine that sort of thing is going to be a bit more pricey.
So you would normally do bridging finance to purchase it unless they've already bought it cash. And it depends if they've got any planning permission or whatever they needed. But normally, let's say, for example, they had no planning permission.
Would you exit that on a valuation, or would you exit that more on a...
Depends if they need money for the development. So you might do a bridge to purchase to get the planning permission, and then you might move on to development finance to give them money to do the works, and then you would move on to, that would be a trading business on that example. There is probably an element you could argue, depending on the lender really, that you could propose it as a commercial investment. But I would say on something like that, they would probably more base it on which is better actually, because you would
I did that with my HMO for the commercial lending. I got on it. I actually did it. I got the lending with a bank who did the initial purchase, the development finance, and the exit finance. So I kind of took the risk out of it. But they came back and it was the usual 90-day valuation, 180. Then take away the the aggregate value of the portfolio, and then take away 25% discount on it. And then you were getting your 75% based on that. And I was like, it's got to leave me like 200 grand in the fucking deal. I was like, no way. So I'm on the phone to the bank, and like you said, have that bit of conversation with that fire sale exit isn't selling these 7 individual student flats. That's chucking them to a fucking, a London auction house, and they're still going to give you a hell of a lot more than bricks and mortar value. And I expected like a kind of back and forth or, oh yeah, you're right. They just want that kill, and then just like put the loan through. And I was like that. I was like, oh, fine. Like the kind of
so you managed to.
Well, you actually got them into.
I got to submit to it.
You were not thinking that.
No, it was not. I was like, I thought you're just going to turn around and say they binge you.
No. Like next minute the loan offer came through. Really? And the loan offer came through in the 3 tranches, and I was like, holy shit! I was like, didn't I
get yourself a job as a mortgage broker?
I know you won that one. Do a job.
But yeah, there's quite a lot of finance, I suppose, crossovers for the majority of the people that will listen to this, I suppose, building their buy-and-let portfolio. The crossovers that Nick's talking about, like your apart hotels, HMOs, and portfolio lendings, that all kind of ties into your
so I would say like in over just a partner buying their buy-to-lets or their main residence, stick with your residential mortgage broker, where we convince maybe a landlord 4 or more properties, HMOs, multi-unit blocks, commercial assets, semi-commercial, bridging, development, business growth. Yeah. And I always say it's about the purpose of the fund rather than the assets. So we can secure against vans or tractors or invoices that are due.
Like the glamping pods, they're quite popular now for finance.
They're really hard to finance, actually.
I thought they would be.
Yeah, they're like a holiday park's fine. So I've actually, it's one of my LinkedIn posts for this week that I funded a holiday park where they raise money on the existing holiday park to buy another holiday park, but that's more seen as a trading business. So that's how we got that one. But if somebody comes to you and says, I just want to buy a lodge, you look at them and you're like, they look amazing. Like, I would buy one of them, but they're really hard to finance.
Is Par Hotels a bit similar for the finance then when they look at the trading income off the asset, like similar to what Nick's talking about there, split them into 7 or 8 units, not all going to be like Par Hotels. They're not going to put that on a
that
would going to be on a trading.
Yeah, so I'm actually doing one up in Tarbit, I think it is now. And I don't know, next to Loch Lomond somewhere. Yeah. But it was really nice. It was an old like house with a post office next to it. he got planning permission, and the finish is beautiful with it. It's all like small service accommodation type rooms. And then when we're doing the long-term finance on that, we'll base that on the trading income, because we'll have a year's trading history by the time it's done.
For at least a year.
Sorry, that's a really good point. How much, what are the lenders wanting to see then? Is it 1 year trading?
That depends on each lender as well. So some lenders will be 6 months trading history with 24 months projection. Some will be 1 year's history, but then we do have some lenders that will go fully projection led, as long as you can get like a letter from like Pillow Partners are a good example, where we can contact them and say, this is the area, can you do as a summary? Now they will charge the client for that, but it's really worth it, I would say, because then we can use that, and then we'll take that to the client's accountant. We work really closely with accountants and stuff as well to say that this is what we need this to show. Do you think that's like feasible to get there? And then they'll tell us, and then they'll do their projections.
So like, yeah, bridging lending, like your short-term lending for projects like that, I'm assuming because of their trading income from these apart hotels, you could probably just sit on the bridging loan for that a bit longer. But obviously, if you're looking at a portfolio and it's residential properties, you're not getting that much income that you can stay on the bridging loan for a long time. You want to try and get on and off as quick as you can.
And a lot of people do that. So a lot of people will go on a bridge for 12 months, and at the end of 12 months we'll go to look at the exit, and then we'll say, right, you could exit this now and you'll maybe be on like a higher rate, or if you want you can stay on this bridge for another 6 or 12 months. We'll do like a re-bridge, and at the end of that then they might get a tier 1 lender because they've actually got the 1 year's trading history behind them. So they'll weigh it up and go, right, it might cost me an extra 3% over the year, but actually I'll then move to a tier 1 lender at the end. It'll give me a wee bit more flexibility. So
sorry, just explain about the tier 1 and tier...
so tier 1 would be like your high street lenders. So the ones you'll see when you're walking. Mind you, there's none left, but the ones I know, the ones you would have seen like 10 years ago.
The ones that are empty in the high street.
Exactly, which would be good for commercial investment if they invested into the high streets. But I would say that, they're what we would class as a tier 1, and then you kind of go further down, right the way down to high net worth and family offices.
How much difference in like your fees and interest rates from a tier 1 Bank of Scotland or whatever?
You were saying like 6%, like as a good. So where would it? So
it's actually not like, so let's take RBS and Alica for example. So RBS would be your really probably well known high street name, and Alica, unless you worked in commercial, people probably wouldn't know who they are. Alica are like classes, maybe like a not your high street name kind of thing. Their rates are actually not much different at all. Like sometimes you'll even get a better deal with someone like Alica. But it's just a case of presenting what's really what. So we would normally go to the like client and say, what do you want? What's your priorities? And then we would do a wee table up for them, say lender A, B, C, D, E, F, G, whatever. And then we'll say this is what their maximum borrowing is, what their rate is, what their fees are, what their overpayments are like, all the stuff that's important to people, their time to money, the security that's required. Some people don't want to give a personal guarantee or a debenture fixed and floating in Scotland. Some people don't want to give all that sort of stuff. So we'll put all that down. Then we'll say to the client, which one do you want to progress with? Let's say they says, let's go with lender B. I would then do a formal application to that lender, take it all the way through credit. The way that I explain it to people, which sounds really corny, but I always say like it's a bit like Dragon's Den. I represent you to the Dragons, which are the same as our funders, and then I'll get the best deal for you. Then I'll negotiate between them, like, would you give me this if I can give you this? And do a bit of negotiation. Then I'll come back and get the best deal for them. They would then go to formal application, get that formula approved, and we'll then present that to the client. If they're happy to proceed with that at that point in time, then they would pay that 995, and then we move to valuation.
So how important is you and your broker's relationship, like your BDMs for the lender? So important now.
So like probably
you can have these conversations with them back and forth.
Probably out of any relationship we deal with, whether it's valuers, solicitors, your BDM and the people above them. That's where, like, because
that's where the money's come from.
A lot of the BDMs will I'll phone them and say like, I need this done, like or can you change, like, can you use this part of the valuation rather than this part? And as long as they really like your sound, like, so I would say like, this is the thing, like I am actual pals with most of the BDMs now. Like we go to all the events and we'll share a room together and stuff now. So it's good. And then when you actually get in with like their bosses and stuff, like they go out their way to like
help you.
Like, so one of the banks, the owner of the bank's my mentor, and like there's a couple of times that I've said to him, like, and it's all been obviously legit on my board, but it probably could have fell by the wayside. And I'm like, I need you to oversee this and help me get this through. Like, like whatever you need from me, I'll get, like, and I'll make sure that we get it presented. But I need, because if you know your boss is overlooking it, you're going to try 10 times harder to get it sorted. So having the relationships is really important.
How do you kind of manage expectations then? Because obviously you must get people that just get carried away, and like we meet a lot of people who are starting out in property and they don't have any money. Would you say most of your clients have built a little bit of wealth and to invest in commercial property? Are you seeing people coming in actually that are kind of more like deal makers, and they're managing to find private investor finance from other sources? And how do lenders actually look at that in the commercial world as well? Say I was getting 100 grand off a uncle or something like that.
Uncle's fine because it's a family member, so you can say it's gifted. But
you're lending me 100 grand.
Right. I do think so. There's two sorts of clients. You've got the ones where it is a lot easier to get the lending approved for, which maybe have built up their wealth,
trading business.
Yeah, so
they're for 5 years.
When I say easier, I mean easier from a affordability perspective or experience perspective, but we do have the other end of the scale where it's like, as a client that's at uni, no background assets, staying with his parents, we still managed to get him like a buy-to-let. Like, so like you've got that end of the scale as well, or the ones that have been in these property courses where use their money and you still can get them over the line. Like I don't think there's any so far that I've not. The only thing I would say from that though is I have seen a couple of times where clients have came to me and said, I've been on one of these property courses. I had this one guy, for example, and he literally, like, I felt so sorry for him. Like, he'd put 30 grand into these courses. He took out a credit card to do the course. He had no background income. He was a recovering alcoholic. All these, and I just feel like there was an element of like, get your 30 grand back and use that 30 grand and
put it in the deposit.
Put down. Do you know what I mean? Like, so I do think there is an element of making sure that whatever people afford to do.
Do you feel like this guy's just come to you with totally false expectations about what he could do?
I've been told I can come to you and you can get me 100% borrowed. I'm not going to put in any of my own money. I don't have a job. I've got nothing in the background. What lender's taking the risk on that? Like who would take that
That's
risk?
what they don't really explain. Ultimately, you know, that the lender is got to assess the whole risk and they've got personal guarantees and all the rest of it. What, by the way, on the personal guarantee, God, you must have signed a few personal guarantees over the past, like, fucking hundreds.
Yeah.
How much value has a personal guarantee got when you've got like 100 of them?
Question
That's so true.
Is there a thing coming out called personal guarantee insurance?
It's already out.
Is it? I was thinking this the other day. I was thinking, surely the amount of people that have been doing buy-to-let limited company mortgages for the last 5, 6, 7 years was been really popular. I suppose since George Osborne in 2016. We've all seen millions. I mean, it wasn't. My wife never actually questioned me until we'd made up that Instagram video from Lendinvest. Lendinvest kicked back the mortgage for exiting a portfolio they'd bought, and they only take 43 grand at the company. So they actually questioned it and says, how has this company bought £9 million of property with 43 grand income? And I made a wee reel on Instagram, made a wee bit of joke on it. And my wife's like, is our house at risk? And I was like, our house at risk? Was that a fucking risk like 10 years ago? That was gone in the first person. A few personal guarantees.
Gone.
Like, what?
Really? You better gather your belongings.
How much debt have you got? I'm like,
do I know? No, but the personal guarantees, you can get away with them, especially with lower loan to values. So like I'm doing one now for a SIP that I'm lending to, and they won't allow the client to take a personal guarantee or a debenture. So we've had to reduce the loan to value like of the borrowing, because if it's below 50%, a lot of them will waive it. So just about that risk-based rating again, like the lower the risk, then.
I found it quite interesting as well, like some of the lenders that you'll speak to as well, some of them will want floating charges with them, but if you've got a company with...
It's a floating charge, please.
So it's the same as a debenture. It's called debenture in England. So it's basically like, if you can imagine if this is a limited company, it's got all the stuff in it, a debenture kind of sits over the top of it.
Charge, in case anything goes wrong.
So where a lot of clients don't like taking it, and I get this because back in 2008, a lot of people get really screwed over. So what basically happened is, let's say, for example, you've got a limited company that owns 10 commercial assets. If one of them goes down, and the bank are trying to recover that, they can come after every asset in your portfolio. So see in 2008 when the crash happened, so many portfolio landlords lost all their properties. So now what you see, which actually works quite well also from a lending perspective, is a lot of people will put each limited company in its own SPV, so a special purpose vehicle. So they'll have like, let's say the name of the street was John Street. You'll have like one John Street is a limited company, then you'll have like whatever other street, and that will be like they're all under it. So if you take a fixed and floating or a debenture, it's only that one property that's
see
at
that
risk.
quite a lot.
Which I've got a client now, and he came to me the other day and says, I've got £64 million property portfolio. I really want to start getting lenders that will go up to 75% loan to value without doing a personal guarantee and a debenture. And I was like, obviously speak to your accountant first and get like tax advice on it. I was like, but why don't your future ones, you just buy them all under a new limited company, and then that takes away that risk. Like, and then you'll get up to 75% loan to value, and we can ask. So,
but then what if that company's brand new?
That's fine.
They just go into the backgrounds and
Not
your
even
other trading, your other businesses.
It's all about the serviceability of the asset that you're buying.
So are the lenders quite flexible with that? Because I spoke to a portfolio owner. It was actually a really, really phenomenal old guy. Like, he built like cinemas and rented them to MGM and sold them off. Like, he was 74-year-old, had all these businesses, all these hotels, and the last day's assets. Like, I'm looking at them, and I was doing my research, and I says, why did you sell 3 of them out to a separate limited company? He says, oh, they were looking for the floating charge. I was like, oh, who was that? And then they mentioned the lender, and I says, well, we had the same issue, but managed to get around it by just speaking to the BDM and going, look, we're not giving you a floating charge, because inside the limited company we've got 7 or 8 lenders with 80 or 90 properties in that. We can't give you a floating charge because all the other lenders.
So they then need to put in what's called a letter of non-crystallisation. So it is possible, but then some lenders won't allow another lender to sit behind them. So you might end up with one property with like 3 different lenders on it with this letter of non-crystallisation.
It's messy.
But part of you is like, are they even going to enforce that? So it does seem a bit of a tick box exercise a lot of times.
Like,
the
all these things, I suppose.
funniest thing is when you're sat at the solicitors doing that personal guarantee, and the solicitor looks at you and goes, now, I'd advise you not to sign this. They've got to do that, apparently. They've got to say, don't sign it, but you're going to sign it to get...
You've got to sign it to get it, but don't sign it.
It's funny, like, because there's a new solicitor that joined one of the firms that we use. We signed their personal guarantee last week for the next 3 picked up today. And she actually went through the proper rigmarole because she didn't know us. We're like, yeah, but no,
we've done this a million times.
Can we move it along? Like, we've got a meeting in 5 minutes. Like, she was like going through the whole lot.
Oh,
like,
Billy Big Boss over here, man. Still 100 deals.
If it was other solicitors, she'd be like, you know the script. Sign on, don't sign
Definitely.
it. Sign on, don't get the lending. Sign it.
I know.
I don't know how much weight they're going to hold, like, personal guarantees.
Especially if you have signed so many, realistically. I don't know.
What is the point?
So just to get, where in the process would you advise a commercial property investor, if I'm really serious about buying a commercial building, where in the process do you advise somebody reach out to you and obviously start doing that kind of background? And
depends how fast.
This is why he finally got you on 5 years later. He's really looking for a commercial.
So he's like, it's only taking 5 years.
Now, talk to me now, because if go by your track record, I'll be like 5 years
ago, I might have actually bought a property by now.
No, exactly. That could have taken.
Sorry.
But yeah, I would say it depends, right? So how fast you want to go, because and this is maybe a wee bit selfish of an answer, but what sometimes we will get to people coming and they'll be like, I suppose it depends how educated they are on it, because we will give them education, but sometimes like, they'll be like, I've seen a property, it's on for offers over 500,000, but I'm going to offer 400,000. Can you get me an agreement in principle? And I'm like, no, because I'm going to waste all this time getting an agreement in principle based on 400,000. You're going to put in the offer, they're going to reject it, and then I've wasted my time. So what I would always say to people is make sure, it doesn't need to be anything in writing, but make sure you've had the conversation with either the estate agent selling it or the seller. Will you accept the 400,000? If so, great, come to me and I'll start working on it straight away. But there's no much point in, every property is so different. Like, if it's just a conversation, say like, Emma, what do I need? Then fine, give me a call and that's great. We can go over basics, but I won't be able to get someone an agreement in principle or anything until I know the exact asset, what it's going to be used for, what the area is, like all that sort of stuff.
Obviously, if you get the offer agreed, you can jump in pretty quickly and start fact finding that. And obviously, like, and I normally say to people, like, depending where it is, but like, I'll come to your office, because a lot of time you want to see the asset they're securing against as well, especially if a development site is really good. Somebody's buying a commercial and turning it into residential, like going to these sites and really seeing it with your own eyes really does help, like for when we do our proposal, to really be able to break it down as best as possible for the client. I'm a very visual person, so I like to really see it and say, like, this part's going to look like this, and I get really excited by it, so we'll probably make it sound like even better, because I get really like, but yeah, I would say seeing the properties really help. And is there any kind of like warning signs that you'd give to people to say, like, just don't even waste your time? Anything recently where you've tried to push through deals and it's just been reject every lender you've gone to? Is there anything out there that is really difficult finance? I mean, you mentioned about the log cabins and all the rest.
Log cabins, that is.
Is there any other ones, or
caravans.
is there usually some lender out there that will do some sort of deal?
I honestly don't like log cabins, and that is probably the only one that I can really think of. Like land, if something like land banking is quite hard. So if a client wanted to buy a bit of land and sit on it, that's difficult because it's not income generating. It's different if you're buying a farm that comes with 100 acres. Great, that's fine. We can do that all day long. But see, somebody just says, I found this plot of land, I just want to buy it and just keep it there until 10 years down the line. That's really difficult to fund.
Could you use, if you had a residential, say somebody's sitting there with a house that's paid off the mortgage, just a residential house, would you be able to secure against that?
Do that quite a lot. So a good example would that be like a third party legal charge, which we do quite a lot. So let's say, for example, you two are buying a property together and you don't want to put in any of your money into it, but you've got your main residence in the background that's either paid off or it's got borrowing on it, doesn't really matter. We could do a loan to the limited company and then take a third party legal charge over your main residence to get you the 100% borrowing, and 100% to do the works. But using a background asset like that is actually a really good way to get more borrowing for clients.
Funding, yeah.
I know. I'm just thinking about these sort of creative ways. I
always find that quite fascinating, like the creative ways of funding.
Like another really good one is like a trading business. So I'm doing one now for a car garage, and she doesn't have enough for the deposit. So we've got our 70% on the asset, because a lot in our industry is to do with the sector you're in. So let's say it's a dentist or a doctor, we would get 100% funding just because the sector.
Because the lender sees that's quite safe.
Yeah, it's like
low risk.
Low risk again, and then you might get like an accounting practice or a estate agent or a broker firm. We'll probably get like 75%. Because we're technically classed as like a professional service or whatever. But see if you go into like retail or car garages or anything that's like hairdressers, tattoo shops, like they'll go down. Probably the lowest you'll see would be like 60%, but there's such a big range in between them. But this car garage that we're doing, we've got the 70% loan to value on the actual target asset. We then got an unsecured loan on, like, we didn't get as much as we wanted on the unsecured loan. She then had a couple of cars in the garage, so we then raised on the assets within the cars, and then we're in the process. It's not fully approved yet, but I think we're going to get a grant for the other part. So that's getting 100% funding, but just pulling lots of different ways to get that funding.
Where did the grants come from?
Mainly from Scottish Enterprise.
All right, okay.
Yeah,
so you can apply for them as well. Does the client need to do that?
No, well, I don't do it personally. I've got a guy that I work with.
Right, and that's another job in itself.
Yeah, so I would say to him, like, this is the scenario. I'll give him the full picture of it, and then I'll pass it on to him, and he'll look at the grant side for us.
Brilliant. And you yourself, Emma, where are you headed in terms of, like, actually, have you done any investing yourself? Like, or is that something maybe in the future that you would?
So I've got a holiday later now, but I really actually didn't even buy that for investment purposes. It's just because I really wanted to go to.
Where is it?
It's One Lockhead, so it's like the highest village in Scotland.
Oh, nice.
So it's like in the hills. It's like really old. It's not even got heating in it. It's just like old, like one of the really old fires. But I really like to like just escape to it. So we bought it for that.
So you go there and do cold water therapy and stuff like that.
Oh my God, rubbish. It's
you put it on the SA market like that, or just for yourselves?
No, well, it's on Airbnb, but I probably will start building on. I just want to, because I've been so focused on the business, like even there's so many opportunities, like I get so many deals from liquidators, for example, that will be like here, and like the two examples I gave you earlier, like the one in London and stuff, like they're really good deals, and I probably should be doing so much more with them. I see, because I'm so focused on building, it will distract me. So I do think as I grow, I'll probably bring someone on that will maybe manage the like undervalued properties we get, and I'll probably bring someone in that will get properties ourselves, and we'll start building our own portfolio. Like I've already spoke to my accountant about setting up like a group structure and moving money from one entity to another entity. So we're in the process of setting that up, but because I'm only 1 year in, I think if I try and do too much at once, it'll probably
build
take
that
me
trading
away.
business income first.
Yeah,
so
if I could
you'll see it from your clients as well. Like the ones that have got big trading business behind them can do so much more, whereas the folk that are kind of standing out and not got as much money.
Build the foundations first, and then.
And I'm so excited.
You're so young as well. What age are you?
36.
There you go. Like plenty of time
I think because I am genuinely so excited about my own business as well. Like, so one lender had actually approached me and asked if I would white label lend for them, which basically means it's actually insane when I talk about it. They were going to give me millions of pounds to sit and give out their money for them.
Like almost be like the underwriter for them, basically.
No, actually, I would be, so I could label as like Ross Finance lending, or I don't know what to call it.
You'd be the
lender.
capital.
So like, see, I'll approach the lender and say like one lender actually approached me and said, "Will you take an element of our money and you can lend it because you know what the and that's a probably broker's dream to get to that." But that was when I was 4 months and I was like, if I start doing that, Ross Commercial Finance is not going to go anywhere because and I said to her, I was like, please don't take it as a no, just take it as a not right now, because I'm just not, I want to be so comfortable and so like, and I need more of me in my business because now I'm like, as much as I've got other people do, nobody can really do what I can do. I need more of me before I can start venturing into other stuff. So I would love to come back to that at one point, and I think that it's really
what a compliment though, being approached like that.
Definitely, like
brilliant. You're
to the extent I was like, what, me?
You're obviously doing a lot of good stuff in the industry, obviously well respected. So thank you for taking the time to come on podcast today, and it's been great chatting to you.
Yeah, you too.
Hopefully we'll do more in the future. Where can people reach out to you? Get some
LinkedIn, Ross Finance or Emma Ross, Instagram.
Instead of going on that 30k property course, go and get an hour's meeting. Maybe not an hour.
Not an hour.
No, an hour.
But it's all free.
Get some good advice from your broker, definitely, 100%. It's part of your power team.
Absolutely.
Excellent. Thank you.
Thank you.